This morning we had the NFP report, and clearly the market is cheering the jobs numbers. At the time of recording this, the S&P 500 is up 1.2%, the NASDAQ is up 1.4%, the Dow Jones up 1%, and the Russell up about 1.4% as well. And this is in response to the slightly better than expected numbers that we got this morning. We were forecasted for 126,000 to around 130,000 jobs to be added in the previous month, the month of May. But in actual terms, we got the number this morning at 139,000 jobs. Now, this beat was narrow, but it was a beat nonetheless, and the market is excited to see that the jobs market does not seem to be materially collapsing, as we kind of were worried about going into this print. The ADP numbers also came in very poor this week, so people were a little bit worried, but this yet again is proving to not be a very good indicator or a good predictor of what the NFP report's going to look like. Unemployment claims also came in higher than expected this week, so people were on edge about this NFP report. So we saw some nerves cooled with the better than expected jobs print. Unemployment rate remained steady and near long-term lows at around 4.2%. Remember that the long-term average for unemployment rate in the United States is somewhere in the neighborhood of 5.7%, so 4.2% is pretty good unemployment rate. Finally, another positive development is we see the average hourly earnings year over year remaining steady at 3.9% growth year over year. And the reason this is important is because we're seeing 3.9% wage growth at a time where inflation has been falling to 2.3%. We've seen a persistent fall in inflation in the last few years, and this is really good considering people are getting wage increases more so than prices are going up. Remember that this is an index level and does not reflect necessarily a specific product you have in mind that may have gone up in price a lot. This is an aggregated view of products in general. And Trump says that the Fed should cut interest rates by a full point. He pointed out that Europe has had 10 rate cuts and we have had none. Despite Powell, our country is doing great. Go for a full point. Central banks do typically, however, limit rate moves to a quarter point at a time, and actually a full point would actually probably cause some panic in markets because people would say, what does the Fed know that we don't know? Trump also said that the Fed could always raise rates again if the cuts led to inflation, which is a fair point that we've talked about on the channel here recently. The president has repeatedly berated Powell for not cutting rates as he desires. The two men met face to face for the first time last week, with Trump telling Powell he was making a mistake by not lowering rates. And in some ways, I actually agree with this stance from Trump. I don't necessarily agree with the berating of Jerome Powell, but this concept that the Fed is sitting at a 4.5% interest rate in a time where inflation is around 2.3%, this is very restrictive and could actually act to hurt the economy if we don't get rate cutting soon. Now, I don't necessarily agree with the idea of cutting interest rates down to 3.5% really quick like that, because we do still have some uncertainty around tariffs. But I do think it would be potentially appropriate for the Fed to start cutting interest rates to start to just say, hey, look, inflation's done really well and we are very restrictive. The Fed themselves believe they continue to be restrictive as a community or as a group. And so I do think it's probably appropriate for that rate cut to start happening. I don't necessarily mean rapid, massive rate cuts just because Trump demands them, but rather we're very restrictive. We've had inflation progress. Yes, we have some uncertainties around tariffs, but we do see some jobs data cooling. Maybe it's time to cut some rates. The NASDAQ is up 1.5% here, and we are back towards those previous all-time highs. Kind of crazy to think we've had one big round trip. Everyone got so scared with the tariffs and stuff like that we sold the market so aggressively, and many people are still in denial with this market. Just look at the AAII Investor Sentiment Survey, which asks stock market respondents to give us a bullish, neutral, or bearish outlook, and survey respondents have been consistently very bearish, but still do remain more than average bearish at this time. You can actually see the number of people responding bullish compared to the number of people responding bearish still weighs heavily towards the bears, as people are still concerned and worried about this market and possibly also in denial of the performance that we've seen. But what has led to the stock market doing so well, and why do I think that it can continue? Well, I wanted to break this down very quickly. First of all, earnings season was very strong relative to what people thought it would look like. Many companies raised their guidance despite many people thinking companies wouldn't even guide at all all about the forward-looking returns of their companies. But we had pretty solid earnings, especially with the Mag 7, the Nvidias, the Amazons, Apples, those sort of companies. The big ones reported pretty good earnings. Inflation is also cooling. Interest rates are expected to come down, even if they come down slow or fast, depending on whether Powell or Trump gets their way. And then finally, tariffs have overall been less scary than what people thought they would look like over here, giving us a nice tailwind to come back from. Many countries showed up to the table wanting to make deals with the United States, as opposed to what people were fearing over here, which was the worst case, that countries would just shut their doors to the United States and refuse to deal with us. But instead, many countries have, kind of during this 90-day pause, begun the process of negotiating with the United States about everything. And I do think that we're likely to see deals. I do likely think that inflation is at a good spot. Interest rates are going to come down. And I do think that we are going to continue to see this strong economy continue to surprise analysts and people in general, and that we are likely to see new highs for the stock market, in my personal view. So a quick congratulations as we near those previous all-time highs to everyone who had some guts to actually get out there and buy stocks during the sell-off. It was a very hard thing to do. People were terrified out there. And so for those who remained diligent and remained patient in all this and did well for themselves, congratulations. The Edgefinder continues to give us some really solid readings on the indices. You can see the NASDAQ, the Dow Jones, the Russell, and the S&P 500 all getting very bullish readings on the Edgefinder. And the reason for this is that sentiment, as I just showed you, is still contrarian, giving us a bullish signal since everyone seems to be still nervous about the stock market. Technical reads, momentum is clearly to the upside, and economic data has held up relatively strong compared to forecasts, giving us some strong signals on the Edgefinder. So with that said, how am I playing it? Well, I'm still long the Russell, and I'm watching today's close to see if I can actually trail a stop loss into profit on this trade. We've got a level of resistance here being tagged as we speak, and I'm watching to see if we can close decisively above that today. If we do, I'm going to take this stop loss and move it right here and lock something in on this trade so that no matter what, I make some money on this trade, even if the market reverses from here. This is a trade that I shared inside of our VIP Discord, and if you're not already in the signals room and would like to be, you can get access to every trade that I'm taking anytime I take it, with full entries, exits, and breakdowns behind why the trade was taken. If that's something that would be beneficial to you, make sure to take advantage of our current sale that we're doing, 45% off our VIP group. To take advantage of this discount, click the link in the description. The first one down there will allow you to chat directly to our support team, or you can use the promo code and link in the description as well to explore what the VIP membership is all about and see if it's right for you. We offer chat rooms, we offer trade signals, we offer coaching webinars, and much, much more. So explore it, see if it's right for you, because this is the biggest discount that we do for the entire year, price-wise, for the VIP group. It's a one-time payment to join, and all the info is below. The dollar index is bouncing back here today with this better than expected NFP report, but I think it has a lot to prove before we can call the dollar back to a bullish situation, because yes, we found support around this area, but we did have a lot of data points that came in not so great for the dollar. For example, taking a look at our US economic heat map, all of our yellow text data points are data points that have come in the last 7 days. When we take a look at PMI data, this was weaker than expected. When we take a look at jobless claims, this was weaker than expected. ADP was weaker than expected. Mortgage applications were weaker than expected. And then if we take a look at some of the positives, we had PCE, which was flat. We had unemployment rate, which was flat compared to expectations. Wage growth was strong. NFP was very slightly strong. It was not a huge beat today, but it was a beat nonetheless. And job openings was strong. So kind of a mixed week, but several of our indicators still suggesting some weakness for the US dollar. So the reason I bring that up is that before we get too bullish on the dollar, we have to acknowledge some of its flaws. Some of the data is showing some slowdown in the US economy. And so I think that you're going to need to see with next week's CPI and PPI, you would need to see some sort of revamp in inflation or some growth metrics to start kicking into higher gear before we can call the dollar bullish. In my personal view, I think the path of least resistance for the dollar is still to the downside. However, with the NFP report, I wouldn't be surprised if we head back higher to retest some levels of resistance, which actually could present some selling opportunities in my personal view. Specifically, I like the idea of getting long the British pound against the US dollar on a pullback, and possibly the euro dollar as well, which also is getting a +8 score $1 on the Edgefinder's top setups algorithm. So looking at the euro, perhaps a move down to this 1.11 area. Here's a look at some of the non-USD currency pairs that I'm also watching. And here's a look at metals, which is actually a really interesting story right now. Yes, NFP was strong, but I'm still getting a very weak, but it is a bullish signal nonetheless on the Edgefinder. So I'm going to be watching gold going into next week. I'm not rushing to take any trades, but if we do get a pullback on the price of gold, this could be interesting. So if we get a move down to like 32.40, this previous area of support, I think that the risk to reward on being long gold at that level looks pretty attractive to me. So I'm going to watch to see if we do get some downside push. We've been still stuck from a price action perspective in a very choppy kind of range bound daily chart move. We're not seeing the same kind of momentum and clear directional bias that we saw over here. So I am interested in longs on gold, but going to be very selective, and I'm not in a hurry because I think this market is still very choppy. A couple signals that I'm looking for on gold would either be a pullback down into this 32.40 area like I mentioned, or something that decisively breaks us into fresh highs. Any sort of pullback looks really good. In fact, silver looks really interesting on a technical basis with a huge breakout here beyond this 34.65 level. Any sort of pullback could also be interesting to watch going forward. For those who have been keeping up with my currency trades, I did actually decide to take this move higher on the dollar yen today as an opportunity to close out my trade for a small loss. And the reason for closing this trade is because my bias on the US dollar this week shifted from kind of a neutral to bullish to now more of a bearish outlook. And so this dollar yen trade that I had on no longer really made sense. And so with the pop in price, I did take this as an opportunity to just close out for a small loss. I am, however, still in a trade on NZD-JPY, and I'm in a profitable position on this one. I do think this one has potential to stretch and make a move back up to this 89 level, as the New Zealand dollar is one of our stronger currencies on the Eco Surprise Meter. The Economic Surprise Meter shows me countries that are having basically outperformance in terms of economic data versus countries that are showing more weakness or underperformance relative to expectations for their currencies. So when we look at like New Zealand, the reason I like New Zealand dollar on the buy side is because, again, most of our indicators here are suggesting some strength for the New Zealand dollar, as opposed to like the US dollar, which is looking softer or weaker, Japanese yen, which is pretty neutral, or Swiss franc is looking neutral or bearish even, Aussie dollar, neutral, euro, slightly positive, but mostly neutral. Our big winners here currently are the British pound, the Canadian dollar, and the New Zealand dollar. From a currency perspective, I am generally looking to sell the ones that are weaker and buy the ones that are outperforming expectations. By the way, if you'd like to try the tool that I'm using, it's called the Edgefinder. The link is in the description down below. Probabilities for rate cuts going into July of next year actually diminished from yesterday. So the probability that the Fed is going to cut interest rates, not in the 18th of June meeting, which is pretty much 0% chance they're going to cut rates, but in the 30th of July meeting, we now see just a little 16.5% chance that the Fed is going to cut interest rates, with an 80+% chance that the bond market thinks they're going to keep rates steady, which again will not make Donald Trump happy. But I do think that in terms of where we are with the economic data, the labor data is not crashing or falling apart. We had a decent jobs report here on Friday. I still think that the Fed could potentially cut interest rates in this one, or that it would be appropriate, but the Fed has remained kind of defensive in terms of tariff stuff, right? They seem pretty adamant on waiting to get some clarity, and who knows, maybe in the rest of June we do get some clarity on trade deals, and maybe that changes the dynamics here as well. It's a very volatile market out there. We go out to the 17th of September. We do have a very strong probability here that we do get our first rate cut by that point, with just a 36% chance that we remain unchanged in terms of our interest rate, and a 55% plus this 9%. So let's call it 65% chance we have seen a rate cut by that time. All right, man, let's make a bet. Whoever gets funded first, the other person has to pay him $100. All right, I'm down. Sweet. With my new fair value gap, triple witching timing strategy, you stand no chance. Okay, I just got funded. What? How? We just started. With Maven's new instant funding program, you can get funded for just as little as $19. They offer some of the best industry pricing, fast payouts, and you can trade pretty much anything on their prop firm. If you'd like to check out Maven's instant funding program, the link and information can be found in the description below. You owe me $100, man. Come on, man, that's not even fair. On today's podcast episode with the Market Insights podcast with Johnny Hart, I spoke to him a little bit about this NFP report and just how strong it was. Check this out.
And of course, that means it's non-farm payroll day, the latest jobs numbers, and well, we've seen slightly stronger than expected jobs, with the number at 139,000 in May compared with an estimate of 130,000, and the unemployment rate stays the same. So how have markets reacted to this news?
Yeah, Johnny. So this was a really heavily anticipated number, because I want to just kind of set up the scene a little bit before we talk about those numbers more. This week, right, we've seen some scrutiny of the labor market because you had JOLTS job openings, which were better than expected, but then you had ADP numbers, which at this point, I had a friend of mine text me this morning. He said they should just stop reporting ADP numbers because they're so off in terms of their recent performance of trying to forecast what NFP is going to be like. It's been so, off. But that being said, ADP numbers, the private payroll, not very impressive. Actually really kind of spooked the markets. And following it, of course, we saw the call out from Trump to Powell saying, too late, Powell, once again, kind of re-suggesting that he should have already been cutting interest rates by now, all of that, thesis. And then, of course, we had the initial jobless claims on Thursday as well, which missed expectations. So I'm just kind of catching us up to speed from when we last spoke. Jobless claims were higher than expected. So we did see some weakness in the labor market prior to the NFP report. Then, as you've suggested here, we did get a beat on the NFP report. But was it a massive beat? Not particularly. But I'll tell you why the stock market really likes this. The stock market really likes this because, first of all, there was the whispered numbers towards the end. Actually, I see forecast actually dropped just narrowly before. The forecast number went from 130,000 jobs, which I think you suggested. I see now on my side, it dropped just slightly to 126,000. Not a big one, but not a big drop, but a suggestion that, again, analysts, the market community, kind of uncertain about all this tariff stuff and all of the ramifications. This 90-day pause is dragging on. I'm sure that in coming podcasts we'll be talking about that. We're getting close to the deadline on some of that stuff. So anyways, the NFP report, as you mentioned, did come in better than expected. However, they also revised the previous number, which was a really solid 177,000 jobs. They revised that down to 147. So there was a revision lower on that front. The market really liked, however, that unemployment rate stayed the same, forecasted to stay at 4.2%. We did get that check mark. Still a really solid labor employment rate. And then the average hourly earnings also ticked up. We got a 0.4% month over month rise compared to the forecasted 0.3. So people are getting wage increases. And we do have to remember and put this into perspective, Johnny. A couple of years ago, people's wage increases were being outpaced by inflation. Now, wages are outpacing in the United States the rate of inflation at this time, making people feel a little bit better. We also saw that in the CB consumer confidence. So something's looking up, regardless of the kind of dire, scary world that we're living in right now. And finally, if you made it to the very end of the video and you want more content, then check out my second YouTube channel today, where I actually made a video talking about the Elon Musk and Donald Trump fallout that we saw in yesterday's trading hours. If you'd like to check that out, I'll leave it pinned in the top right hand of the screen right now. Check that video out, see if it's if you fancy it. But it is on my second YouTube channel that's all about stocks and options. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.